Knock knock. Ah, yesterday the Kospi index, South Korean index, fall 10%. Nasdaq index fall 3.5%. S&P index fall 1.5%, and this Japanese index fall nearly 6%. Then people have started this chatter all across the street that the market crash is coming. So I don't know whether market crash is coming, or it might be, it might not. I don't want to give any comments on that. Nobody can give this correct. All the pundits, all the gurus of stock market, all the hedge fund managers, even though they can't predict where the market is going. But during the market crash, how we behave, that is more important. How we keep our mindset, that is most important. In today's video, we are going to discuss how we can behave, how we can keep our mindset, so that how we can calm ourselves and what to do, what not to do, how I am treating my portfolio. I will discuss about my two portfolios. One is long term and one is short term, do's and don'ts, and some statistics, historical figures, which will give you a clear picture what actually happens during the market crash. If you are new here, I am Vikas. This is Break Free, and I am on a mission to achieve financial freedom. So let's start together. During 1928, since today, the market crash happened 27 times, where the S&P 500 index dropped 20% or more during these periods. So what actually this means? This means that every time market goes down or market crashes, it is coming back very sharply, very rapidly, and bounce back and create a new all-time high. If you see the historical pattern, starting from 1928, it is always bounce back. So, how people lose money during the market crash? Let's discuss few points before we go deep dive into these points. So, average market correction, it happens every 3.5 years frequently. Like every 3.5 years, uh, market, the bear market or bull market, they change the cycle. And how much time it takes to recover a bear market? In studies, it is mentioned approximately it is 14 months. The longest bear market lasted during these periods were 14 months. So, in order to recover, fully recover a bear market is 14 months. Now, 78% of the time, market is always rising. It's only 22% when market are falling during these periods. Isn't it interesting? Next, during the COVID, whoever sold their portfolio, it was S&P was down almost 34%, and those 34% recovered within 5 months of time, and this is the strongest recovery historically. So how people lose the money, the main point is there. My two portfolios, one portfolio is for the longer term and another portfolio is the shorter term. So in long term portfolio, I have some growth stocks, quality stocks like Magnificent 7 stocks, or some stocks which I have done extensive research, and I have a plan to keep them for a longer period. Longer period means 5 years, 10 years, 15 years, 20 years, and that is for my retirement purpose. So I have index funds also. I have passive dividend income stocks also. So I keep it for longer term. I don't treat as a short term portfolio, and that portfolio is intact. I don't look again and again that portfolio going back and forth. Second, I have another portfolio, the small portfolio that is for short term, and it is trading portfolio where I keep trading on futures, options, and day trades. So yes, during the crash, the portfolio of the longer term I don't touch. I don't even touch the portfolio, but I take the safe positions. I move my stops in my second portfolio, which is trading portfolio. You need to understand one thing during the market crash, what we need to do and what we need not to do. So first thing, during the market crash, say suppose tomorrow is a market crash, 20% markets are down. What you are going to do? 20%. I'm not giving you a threat. I'm just giving an hypothetical example. So nothing to worry. So if the market is dropped 20%, first thing I will do, I will check my emergency fund if that is intact. It is there 3 to 6 months emergency fund. In case of crash, I will not require to liquidate my long-term holdings. Second, my DCA continues. Remember, we discussed in our last video regarding DCA and lump sum, which is better. So I continue dollar cost averaging. If you haven't watched that video, please go and check this video here, where you will understand the DCA and lump sum, which is better. So I try my maximum that my DCA is continue during these sell-offs so that I can buy more shares during these crash times. Third thing which I do, turn off all the financial news, all the financial channels. It is not because they are giving you the fake data, but it is because the news which you are gathering, it is not helping you to decide anything or to achieve anything, but it is distracting you to decide something better. So I turn off all the news channel, financial news channel, and stick to my plan which I have decided. The fourth thing, if I have saved some amount for these type of crashes, or if I have some extra money saved in my high yield savings account, I will put that money also. If the market crashes 20%, I definitely put that half at one level and second half at the second level. This is I do. What I don't do, I don't sell those stocks in panic, which I don't need for next 5-10 years. So this is very clear. This is the written rule book which I have explained. Second thing which I don't do, that is I don't try to call a bottom and be a hero. Nobody tell where is the market bottom and where is the market top. If is there anyone who can predict the market's top and bottom, it can be heaven for them. So I don't try to predict the market where it is the top and where is the bottom. It's very important, and you need to understand, I don't try to average my holdings with the leverage money until unless it is not decided in previously in my plan and I have a fully planned. So the fourth thing, I don't check 5 times in a day my portfolio, which is giving me which is giving me stress every time whenever I check the screen. I don't take, just switch off. That's it. Simple. So these are do's and don'ts. In this video, I just wanted to convey this message to each one of you, that during the market crash, it is natural mindset of all of us that market is crashing. But you understand one thing, if you are holding quality stocks, if you have really invested in genuine businesses, then you have done your extensive research, you have deep down the research, always tell that okay, this stock is good investment, and you really invested in the business, not with the purpose of speculation, the gambling, but with the purpose of long-term investing, then you no need to worry. If you know, if there is any fundamental changes of the company, say there is a company X and the revenue is down for last three quarters, the profit is down, the shareholders, the promoters, they are selling their shareholders, that is alarming. That is alarming situation. You need to understand these basics, and once you understand these basics, you will not be able to you no need to worry about your investment during these type of crashes. Rather than worrying, or rather than giving stress to yourself, you can plan that how you can accumulate quality assets, quality stocks, ETFs, or how you can continue your DCA during these type of crashes. That will definitely give you a peace of mind. So the first important thing which I am again telling you regarding the emergency fund, if you have not gone through my video of emergency fund, how you can create one emergency fund, what is the process, you can always go and check here. This is the video where I have mentioned how you can create your emergency fund. Alright, so in this video, this was just my message to all of you. And yes, market crash can happen, cannot happen. When it will happen, nobody knows, but our job is to prepare ourselves to be ready for these kind of situation, so that it will not create a surprise for us in coming times. Thank you so much. This is Vikas, this is Break Free, and the journey starts now.